Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Thursday. We're now at the 19th of May, 2022, just getting on to 6:30 p.m. Central Time. You know, I wish I can trade the market as good sometimes as I can talk it, right? We were talking that as soon as we heard that Shanghai was going to go into the plan of finally coming out of the COVID quarantine, that we'd probably get good rallies in copper, maybe other base metals, and certainly XME. That's all come to pass. That is what is going on. Today we saw attempts in the stock market to rally, and it makes me laugh almost because when you get that going, immediately the newscasters are asking, well, do you think that's it? Have we seen interest rates peak out? Maybe the Fed doesn't have to go as far as they're going to go. And then, of course, you get the different Fed presidents coming out talking, and they dash that because it's not reality. The reality is that inflation has to come down more. The Fed has to get interest rates to fight it down more, and part of the pain of shutting off demand is just that. As for the metal markets, we had a situation in China that is unusual. Most large economies don't shut down each and every time there's a COVID outbreak. China does. It's not going to change from what I could see it. Can you imagine they're suddenly going to change the policy and make themselves look bad? So I'm fearful for the fall because there'll probably be another outbreak, but I'm hoping that this one we come out of. So when you look at the gold market, do you see a big change in that? I don't. I still see a market that is well under the 18-week moving average of closes, and the bias is down. But I do agree we're getting a bounce in the market, and that makes sense. The war in Ukraine will go on for nobody knows how long. This could just be one of these things that feeds on itself forever. You know, 1,700 soldiers gave up in Mariupol. So what's going to happen? Does Russia really want to keep them? And do the Ukrainians want to keep the soldiers they've caught? So you've got to get through all this. Then you look at gold and you say, what about the NATO affair? You got to put all the politics in it. So Finland and Sweden want to join. Turkey's going to keep them out, but only until Turkey gets what it wants. Turkey has the upper hand, and they will play it, and they will get, at the end of the day, what they want, because that makes everybody win. So it's a process. When I take a look at what the gold chart itself looks like, however, I could see a market that's rounding. Now, just yesterday, and we should get into just yesterday, I had been talking to you that the market was coming down, and the key was if you can take out the high right there, you change the pattern on the chart. And you absolutely took out that high. You get to see that on the swing lines, because if I take the swing lines back like this, you had the lower highs, lower lows. And if you take that out, I said, okay, now you're setting the market up for what? Challenges of key moving averages. The first was the 200-day average, which is right here. And I said, if it can clear it, then the 18 becomes the next average. Well, that's exactly what's occurring. That 200 was literally right over this other high. That wasn't the hard call. But this is a bear market rally so far. No more than that. Why? When you get buy signals that end declines, they often try to go up to key moving averages, which is often the 18-day average of closes, and that's where the game chops around a little bit. So that's what I'm looking for to happen. That's why I've taken off the 200-day average. I think that's the picture of what it's going to try. And in addition, you lost the embedded reading. So here is the market where you lose it. This is Wednesday. You lose the reading, 21. And I said, if you don't get it back right away, drop, you're going to make that run probably. And that's what you did. The market's made the run, and that's what you learn when you take the enhanced Bollinger Band course and some of the other things that we talk about so often. And by the way, if you get my morning videos, and I'm talking the ones that I do 5:30 in the morning first and then about 9 o'clock right after that, we talk about all this. You're seeing the charts as they're developing these patterns, and it gives you an edge for the day's trading, I think. When I look at the gold-silver ratio, so what we had been doing here is we'd made our run. Now we're come up a little. This was Wednesday, and today the market is trying its darn best to settle back. The question is, can you close under the 18-day average of 84.01? If you do, it favors silver over the gold market. And if you take a look at silver, it, like gold, took off. I think that until you take out today's low, which was 21.90 and a half, the odds are pretty solid you're going to make a run up and probably through that 18-day average. I don't expect it to go dramatically higher because you got a lot of problems up here. Now let's use the word dramatic. To get there, it'd be $1.50 higher. That'd be a heck of a play, wouldn't it? That's a $7,500 move in the silver market if that did happen. But right now the key is, and you don't ever want to get ahead of yourself, the first thing that should happen is resistance at the 18-day average and maybe a bit of chop there. The downside is over temporarily. By the way, on both gold and silver, even if you drop tomorrow hard, that doesn't reestablish downtrends. It just breaks the attempt at trying to develop an uptrend. In the copper market, it's the same thing. Back here as we start, whoa, I'm sorry about that. Back here as we started losing the embedded reading, the market came up, and when it came up, you can see what went on, and away you go. Now you're at that 18-day average. To me, the door is open to eventually get back up into this area, the 450-180. I say that because once the Chinese allow the cities to open, and once the factories get going, it's not just Shanghai, it's 31 cities that at some point had lockdown throughout China. As these cities start getting orders that the bigger cities need the parts and whatever they need, everything's going to start happening, be it infrastructure, be it durable goods, and as that happens, the demand for copper comes alive. Now, this is the first test of that number. It's rare that you have a big break like this and you suddenly turn and you're just bullish. So I expect a bit of choppiness, but I'm not bearish anymore. In the platinum market, won't take much to turn this up. You now have a lower low, lower highs, lower lows, but you're over the 18-day average. Got it? So you're not in a downtrend in terms of the momentum, but you're over the 18-day average. You're not trying to hit, so far, the upper and lower bands. You're just staying within what we call window envelopes. I don't show you everything that I show my subscribers here. Why would I? Then what's the point of having my subscribers? So you're missing some of the key components in these markets by my design. I give you the general rift here. You'll never hear me say, I think you should buy here or sell there. They're hearing that every morning from me and as I write my daily updates. In the palladium market, lower highs, lower lows. So we got our first challenge of the 18-day average, and that's often where you have a problem, but you get high enough in these markets, and now the question is if you can get through it again, then the market has to do something. And that would be challenge the 100 to 200 in the upper Bollinger Band. But first you got to get over it. The bears are still there in this market, but I don't think they'll be there all that long because of what I've just said about these factories. Palladium's a catalytic converter. If we can get the components out of China, the factories working, the parts get here, the parts get in Europe, China starts making its cars again. You know, when you hear that in the month of April, not one automobile was sold in Shanghai, you have to understand what that means to a Tesla and all these other companies. But once these cars get built, most cars that are built aren't electric cars. You know that. They're primarily still internal combustion engine. They're going to need these products, and that's when this comes alive again. The dollar's going to get caught, I think, in a churn temporarily. Longer term, I'm still bullish the dollar. Short term, no. It had its run. It stepped out of an uptrend. It's now time for the other currencies to come alive, and they're doing it. And that makes all the sense. But at the end of the day, I still don't know that you're not going to make a run in the euro back towards parity. I don't know that the British pound's going back into the 130 area at this point. It's around 125. There's a lot of work that has to be done, but I recognize a change, that it's not one side of the dollar now, so the market has made that important change. And I explain it each morning. This is how I talk to my traders. I give them first what's happening in Asia, Europe, and then we're talking about in the U.S., if there's things going on in those parts of the world. And then I'll bring them up to the reports of the day, what's going to take place today? What should we be looking at? This is important, this isn't important. Here's a market that is leaving a trend, or here's a market that is locked into it. Use these pullbacks to do blah, blah, or if you're getting bearish, use those rallies to do blah, blah. Depends what the market is doing. I make this easy because it's all about technical analysis on charts I'm showing you. So I am assuming that you want to see a picture. And if you look at the picture and I develop the chart right in front of you, you start getting it. I cover 40 some odd markets in futures and about the same in the ETFs. The charts will have more studies than you're seeing here. You'll see these are the window envelopes. There's another key moving averages that we put on it, and then the little tricks that I try to teach my traders because they want to see just how the markets are playing themselves one after the other. I think it's just also important. So how do you get all this? It's simple. You go to our website, and under the word research, everything is there. It explains how I work with it, what I'm doing. You can also take your cursor and just push it right there. I'm Ira Epstein. You have a good day. I'll see you all, I hope, first thing in the morning is in my subscriber videos. Otherwise, end of the day tomorrow.